Hey class, just wanted to recap or actually summarize some of the things that we've been talking about within the accounting world. Hopefully make a fairly short video. Some of the things that you should keep in mind, and this isn't an accounting class, this is a bookkeeping class. And more than likely you're a small business person, and that's a larger category to farmers and ranchers if you're in that category, okay? And we're not special. We have to apply the same rules for accuracy and that sort of thing as other businesses do. So, but on that topic, I always try to implore practicality within a bookkeeping system, keeping it as simple as possible, understanding what we really want. It's got to be accurate when we get to that outcome in order for it to be good information so that we can base some of our management decisions on those kinds of numbers. So we want to stay as accurate as possible. We want to stay as simple as possible. And above all means, we want to be practical. Okay? So that's kind of how we're approaching this whole topic of record keeping, and especially on the accounting rules that you're going to employ into your business. Now, if you need further accuracy, then you can develop your system so that it will include those kinds of measurements. Okay? So keep that in mind. This will not fit exactly with if you're taking an accounting class synonymously, or you've already gone through accounting, but we want to employ what business people can do, staying within the limits of legality, tax reporting, and that sort of thing. Okay, so let's go into a little bit, which a subject that we haven't mentioned is how are we going to keep our accounting records? Is it going to be in an accrual system, or is it going to be in a cash system? Now, most people want to talk about taxes as soon as we do this. And that's a really, really important reason to keep taxes. But again, I want a great accounting system that will give me lots of accuracy and actually give me my profitability. It's really, really hard to actually get accuracy from a cash system. And what is a cash system? That's actually just posting all cash transactions. And I always take the example of use your checking account as your primary transactional account for your business. As you write checks or use your debit card out of that account, then those expenses are posted to your accounting system in a cash system. Same thing for sales. We sell some livestock or we sell some grain, and we get the check and we put it in the bank. It goes into our checking account, and it's actually recorded and posted at that time with a purely cash system. And just like I was saying, I wanted to get into the disadvantages and advantages here for this particular system. It's one that we've used, most of us use for our personal accounting, but a lot of small businesses, farming and ranching is not different than small business again, but most of us in small business actually employ a cash system. There's lots of advantages to doing that because of tax reasons and the deductions and all that kind of stuff, but we can actually, from a different kind of system, pull those out so we can take advantage of the taxes and deductibility of some of the expenditures that we make throughout the whole accounting fiscal year. So it's not a good reason just because of taxes to employ a cash system. The advantages, of course, to the cash system is it's really simple. And we like simple, right? Okay. So simplicity is the big advantage to a cash system. It's easy to keep track of. The one problem with it, a huge problem, is it does not actually reflect the true profitability of the business when we actually look at the bottom line, okay? Especially when we do our taxes, and that's what we're basing our decisions on. So that's not what we want to do actually in a record system that is including our accounting system. The accrual method, and that's not cruel, accrual and unusual punishment. No, we're not talking about that. We just need a little bit different kind of understanding in order to keep an accrual system. And major corporations, all C Corps, if you actually enact that as your tax type of an entity, have to keep accrual records. And I actually know a couple of farms and ranches that actually do this too. It is a very, very true picture of profitability. So that'd be one of the advantages. And one of the reasons that we would implement some of the rules within an accrual system. But let's just get into what it is first, okay? So the transactions are recorded when they take place. And that may not make sense until we come to the next statement, regardless of when payment takes place, okay? So many times, and again, it's because of our tax mentality, we can modify how much we owe in taxes, which is a great thing. At the end of the year, we buy a bunch of fertilizer, for instance, because we've had a really good year. And our accountant tells us that you need some deductions. So we buy it in December, but we don't apply it to our fields until the spring. And then we harvest our crop in the summer or early fall. So if our fiscal year is January to December, it fouls things up and it doesn't show the profitability for either year very well. So we want to employ a few things, and we can do just some transactions within the business that actually will reflect a truer picture of profitability using some accrual methods. So a rule of thumb that I use when we're transitioning to an accrual method is that expenses are recorded when the revenue they generate is earned. So in that prior example that I just gave you, so we're going to just say it's malt barley, and that's typically in our country in the Rocky Mountain West is harvested in late July to early August. Okay, say we do make a fertilizer purchase for that crop in the next crop year, our next fiscal year, in December, so that we can get the deduction. All right, so we don't show the IRS that we're as profitable as we actually are. Let's say we do that. Okay, we would actually write the check for the fertilizer in December and pay for it and get the deduction for our income taxes for the prior year. But we would not actually post that as an expense until late July or August when we actually harvested that particular crop. Okay, and the other rule of thumb, and you can put that down here in your note taking, is that we typically, and this is a kind of a specialized modified rule for agriculture, but you can think of it in small business transactions as well. But when we harvest is when we actually reflect and post the revenue, which is actually generated by these expenses, the fertilizer, the labor, and the mechanization that we used on it, the fuel and all that kind of stuff would be expensed at that time. Okay, now one of the other things, just to keep it kind of simple on that kind of thing, is employing some practicality. If my fiscal year for that same example is January to December, all right, I'm not going to actually, I might buy fuel ahead of time, I'm not sure, but just say that we buy it in the year that we generate this revenue, we harvest the crop. Okay, we buy the fuel and we pay the labor and those kind of expenses. If they're paid in the same year in which the revenue is generated, I'm not going to worry about it too much. Okay, I'm going to post them as a transaction and expense it right at that particular time, or write the check to my hired man or hired lady and be done with it to keep it simple. I don't want to have to, I might hire somebody, they're putting the crop in April, and actually we don't generate any revenue until July when we harvest, and it's just some somersaults and gymnastics that we don't have to actually include in our record keeping unless we need to do that. Okay, most cases, if it's a check that we write for expenditures for a crop in the same fiscal year, we're okay with posting that transaction or expense during that period, that fiscal year. Okay, just for practicality, because we're going to generate some statements for that fiscal year and determine what our profitability is. I hope that makes sense. I'm going to continue this video here in just a second, but if you have any questions, make sure that you give me a call. I'm up really early. That's the old outfitter in me and small business person in me. I go to bed fairly early. If it's late at night, text me and that sort of thing so you can get your questions answered. I really, really enjoy visiting with you guys. Okay, I just changed the board a little bit. I wanted to further our discussion as far as the accrual ways to handle things. And one of the questions that should have popped up, and hopefully you're taking notes while we're doing this, is what do you do with livestock? I don't have much to do with grains and crops and things like that. Okay, well, I'm thinking about you too. And livestock's no different. We harvest them. There's points of harvest within livestock as well. Weaning is a good time that we could actually would reflect a generation of revenue. Okay, the time that maybe we bring our yearlings off of grass and they could be marketed at that time, we would generate revenue. There's all kinds of different points there, but you're going to have to pick the points that are practical for you. Okay, so if you have any questions on that, one of the things is, do you have to actually make a sale when you're running a somewhat accrual system? Not typically. And the prior example we used with malt barley, and many grains are handled similarly, is that we might not sell it right there. We might wait even a couple of years. We've got a farm in North Dakota that we've got a farmer actually running the place, and some of the grain he didn't sell for up to 4 years. It was held in storage. Sometimes they even store it at the local elevator before it's actually sold and you get a check. But when it becomes harvested is when it actually can be marketed. And that's another rule of thumb. When can it be marketed? At the end of the production period, which would be on a crop. It would be actually when you run the combines or you bale it into hay if it's a hay crop. If it's a group of livestock like calves, weaned calves, right at that point, you can market it at that time. They have value, and so that's what we select. The major part of that is just select when your harvest time is. Okay, if you wean in September or you wean in October, then that would be a time that we could actually market those particular livestock, that we can generate that expenditures, match it with our revenue. Okay, so that's how that goes. Generally, for practicality reasons and so that we get the advantages of income tax that everybody's so worried about in this whole game, and it is somewhat of a game. Once you get into business and that sort of thing, you want to look at your income statement and your balance sheet and all that kind of stuff. One of the factors, or I can tell whether or not a producer or a business person is really excited about their business. A lot of times they're excited to get out there and do the operational things, but they're not too excited about their accounting things. And that's usually a bad sign, because maybe they're not very profitable. They, at the very least, don't know if they're profitable, but they probably have a pretty good idea. You know, your old granddad used to keep it all up here, and it was fairly simple somewhat. Some of it was somewhat simple back then. So again, we want to employ where we need to be sophisticated. we employ some sophisticated methods, and where we need to be simple and it's practical, and it gives us basically the same outcomes. That's what we want to do. Generally, small business people employ a modified cash system where we make some adjustments within the statements itself. So actually, an example of that would be that we show the revenue at harvest by actually making an adjustment within our income statement, which we'll talk about a little bit later, but that reflects the difference from last year to this year if we haven't made any sales. Okay, that's how we reflect that revenue. So, and again, the whole practicality of the whole thing is that if an expense or a revenue, if it's in the year it's supposed to be recognized, then generally that's pretty good. Now, big corporations, the reason they do it sometimes on a weekly basis, monthly or quarterly basis, because they're beholden to a whole bunch of stockholders and also SEC type rules and that sort of thing. So we can get by with a little more because we're small and because it's practical. So hopefully that helps. We're going to dive into the next unit. I want everybody, we're going to go ahead in the textbook and talk about balance sheets. I think it's really, really important in order to see a few of the outcomes, at least in a general sense, before we go back into the accounting and actual, record keeping part of it. So balance sheets, income statements, cash flow, we're going to cover those in a general sense. And hopefully, if we have enough time this semester, we'll get back to them. So over and out for now, and we'll talk.